Let's start for the adjustment entries of manager's commission. Actually, being a chartered accountant myself, I can tell you that in very prestigious organizations, we actually practically implement this concept. All the employees who are of very important nature, and if they leave the organization, there will be really a problem to the organization. Such managers or such employees who are actually an asset to the organization, sometimes they are given such commissions on profit. So manager's commission has its own importance in the actual world. Let's start it. What is manager's commission? It is a percentage of commission on profits. What entry will you pass for providing manager's commission? See, on profits, remember that it is generally given on net profits. And how do you calculate? I'll continue with it. But first, let's try and understand the journal entries. Manager's commission will be an expense to business and indirect nature expense. So entry will be debit the expense. So manager's commission account debit. Account debit. 2. You are just calculating, so definitely before calculating you cannot pay the manager the commission, so it has to be outstanding. Outstanding manager's commission is my liability, so I am crediting it. Manager's commission account debit, which is an expense, and liability to pay him to outstanding manager's commission. Okay, the first entry being the commission payable to the manager provided here, and when I transfer this to the P&L account, what will be my entry? Profit and loss account debit. My expense is increasing. Profit and loss account debit to manager's commission. See, an ultimate effect will be manager's commission debit, manager's commission credit. You can cancel these, and the effect will be my profit and loss. My expense will increase here due to manager's commission, and I have still not paid the manager his commission because I have to calculate it first, then only I will pay. So this is my liability. My liability is also increasing. When liability increases, remember the golden palette, when the liability increases I have to credit it, and my expense increasing I have to debit it. So these are the entries which I will pass. Now how do I actually calculate the manager's commission? Have I, for example, say I have a net profit of 1 lakh. Now this is important for your exams. How do you calculate it? 1 lakh is your net profit. You will be given it like this: commission allowed on net profit before charging such commission or after charging such commission. And see how a word before and after can make a difference, a lot of difference. So I'll explain it to you. Commission allowed on net profit let's do before charging such commission. Now the before word, very important word. Net profit is 1 lakh. Now it is before charging such commission. So what will I do? I will directly see it is generally a percentage, so maybe it is say 5%, so at the rate 5% of your net profit before charging such commission. So I simply do 5% of 1 lakh, and the manager's commission amount comes to how much? 5,000. And if the same thing is commission allowed on net profit, let me take a longer line. Commission allowed on net profit after charging such commission, after charging such commission at the rate 5%. Okay, now after charging such commission, but I have the net profit already in my hands and I have still not charged the commission. So the rate, what you have to do, your formula is simply percentage of commission. What you have to do, you have to take the net profit into your percentage of commission upon 100 plus percentage of commission. Okay, because it is after charging and you have still not charged any net profit, any manager's commission, and you have already arrived to the net profit, so you will have to do adjustment in the percentage to arrive to the correct figure. Now it will be 1 lakh into, it is percentage of commission is 5%, 5% into what? Into 100 plus 5, 100 plus 5, that is percentage of commission 105. When it has to be after, you have to adjust this because you have already arrived at a net profit without doing any adjustment for manager's commission. So net profit will be lower by that amount, and actually it is over 5,000 is more. And see what, if I do it after, it will be around 4762. So read the question carefully, whether it is asking before charging the such commission or it is after charging such commission. It will totally change your answers. And what will be the treatment in the profit and loss account and in the balance sheet? See, this is my profit and loss account. And this is my balance sheet. Useful abbreviations, not like me in short form. Okay, in profit and loss account, I will debit to manager's commission. It is an expense, so it will be 4762. I will adjust the net profit, whatever I had, less this, and then the result will be the final net profit. And I have still not paid it to the manager, right? Calculated it just now only. So first I have to calculate, then only I will pay. So it has to be outstanding manager's commission. Outstanding manager's commission has to be my liability. So outstanding manager's commission has to be written here, 4762. So this was about all the concept on your manager's commission. Whenever you see a manager's commission adjustment entry, pass it at the end after getting the net profit, because until and unless you don't find a net profit, how will you find the manager's commission? And second checkpoint is check whether it is before charging such commission or after charging such commission. If it is before charging such commission, it is plain vanilla. Just put the percentage, find the commission and subtract it. But if it is after charging such commission, then you have to be cautious. First do percentage of commission upon 100 plus percentage of commission, and with that amount subtract the net profit, which will not be the case when it is before charging such commission.